Hello, everyone, and welcome to Pixels and Profits. Today, we are doing a deep dive on Lovin, and we'll discuss the outlook for the company. Also, we will do a very quick update on Unity. We'll also discuss the potential implications of Unity's business to Lovin as they are tied. Obviously, the gaming industry is going through a lot of changes. There's so many things happening, and it's very confusing. So we'll try to sort this out for you. With us today, we have your regular Pixel brothers, myself, Joseph Kim, Matthew Conterman, and Brian Pegnoff. And we have one of our favorite guests from the Deconstructor of Fun podcast and my former co-host and everyone's favorite podcaster, Eric Kress. Welcome, guys.
I don't know about favorite these days.
Really? Yeah, I remember when I was on the Deconstructor podcast, a lot of people would always say, Eric's the most entertaining host. I got that feedback a lot. So I'm sure you've got a lot of fans. Don't be humble, Eric.
No, but I also have a lot of people who think I'm an idiot. So there's a good sprinkling of both. So
It means you're doing
I'll take
something
it.
right. Yeah.
Yeah.
Today's episode is sponsored by Data.ai to access estimates for rankings, downloads, revenue, usage, or engagement for millions of apps on the App Store and Google Play. Sign up for Data.ai. All right, so let's start with the Unity update. Brian, do you want to kick us off there?
Yeah. So, we just taped 2 weeks ago, and obviously some monumental change over at Unity. There's a new CEO, a long time operator, a potential turnaround story on the horizon. So wanted to kind of see the opinions on what's next. Unity also reiterated their guidance for Q3, which de-risked the quarter a bit. I guess the main question after the CEO commentary is, does this quell the development community, which is the major driver behind JR leaving? And is it logical to suggest that new pricing changes are on the horizon again, given a new CEO coming in with a big task ahead of right sizing the company from an OpEx perspective and also accelerating revenue growth? Guys, any thoughts?
Yeah, I mean, I just want to jump in on kind of, I like to look at employment agreements for executives and kind of extract what I think they're going to do based on how they're compensated, because life is about incentives and people do whatever makes them the most amount of money. That's how the world works. And if you don't agree with that, you've never worked in a business. Um, so Jim Whitehurst comes in. He's the interim CEO. He was previously the CEO of Red Hat, which was acquired by IBM. They were an IT services consulting company that specialized in helping enterprises adopt open source technologies for software, yada yada yada. Point being, he's an experienced executive. He's been in a lot of different industries. He's really kind of a mercenary executive. So, if we look at his employment agreement, and actually, before I go into what his is, I like to just point out. I noticed this like in 2017 or was it 2018? Bobby Kotick at Activision got a new employment agreement back then, where he got a massive stock grant if he executed a transformative transaction. And then, sure enough, he sells the company to Microsoft. So, although these things can take time to play out, it is important to kind of understand what incentivizes executives to make decisions. And so, for Whitehurst, he's getting a big grant of 200,000 RSUs, 50% vests at the end of February, 50% vests at the end of May, on top of an annual salary of 1.12 million. So given the drop date of May 25th, 2024 for the RSU vesting, and the fact that Unity has said they're going to do a search for a permanent CEO, my guess is he's coming in and just drop the axe. He's going to come in and he's going to cut costs. He's going to lay people off. He's going to right size the business. He's going to collect his 200,000 stock, which is about $6 million, and then they're going to bring in someone else. I think there's speculation. We've talked in the past how they need a technical CEO to write the product, the technology, and if that's the case, that would make sense. But I think that he's a mercenary. He's here to just drop the hammer and then pass it off to the next person.
Yeah, I think like the kind of CEO. Sorry, I'll hand over to you real quick, Eric. But like, I think the kind of CEO you need is super rare, right? Because I do think the culture at Unity is not right. You're going to need somebody that does the kind of thing that Elon did at Twitter at Unity, but hopefully is better received more broadly than Elon is. And I just think that kind of person is so rare that until we see who this new CEO is, I'm going to continue to be concerned about Unity.
Um, all right. So I don't know if I agree with what you're saying, Matthew. Because I don't know if this is enough time to do what's required to do the significant cuts, right? So, like, but whatever. But I actually agree with kind of the overall picture that you're painting is that this is very similar to when JR left EA, and this has been brought up many times in my my notes. I wrote a note about Unity as well on LinkedIn. And basically they said this is almost a perfect parallel where JR gets basically let go from EA, and then Andrew and then Blake Jorgensen, who's the CFO, comes in and just fucking cleans house, right? They basically just consolidate. Now, the strategy was set by JR and Frank, but these guys came in and executed against it by cutting down like marketing, dramatically, focusing on 5 products a year versus 30, and they actually executed against it flawlessly. And so that I think is the one type of CEO they may need. And I just don't know if this interim guy is the guy who's going to do that. And then, but they do need to find someone that actually can kind of clean house and cut the fat and get them more profitable, because that's the only way that Wall Street's really going to, I think, pay attention to this name longer term anyway. Um, the second one could be just to package them up for sale, which would be kind of the same idea as right size the business and sell it to like Microsoft, Google, or Adobe as an option potentially. Because as a standalone company, it may be hard for them. I will say that Applovin acquiring them, we'll get to that in a minute. Doesn't seem possible, but we'll get to that in later. But anyway, that's the kind of way I see it right now. That's what they're looking for. And there's some debate about whether or not he was let go or he let himself go of JR. I think it's probably a combination of both, but it's definitely, I think, the right move for the shareholders and for Unity going forward. I would.
Yeah,
Yeah,
I think if you
I just want to note, like, I agree. Like, you're not going to make these transformative cuts within 7 months, but you can come in and, you know, lay the plan for it, and then you either stick around and they extend the term 3, 6 months, whatever, or there's a operationally focused guy like a Blake that comes in, and I hope Blake's okay. I know he had a cancer bout. I remember seeing that when he took a leave from PayPal, but if someone like that then comes in and actually executes the plan, right? I mean, but if you at least come in and set the stage for it.
like there's two separate issues that ultimately the CEO is going to have to face, and the first one that we're referring to is just the basic fundamentals of the business, right? Like cutting OpEx and trying to stabilize or increase revenues over time, which would induce like a new pricing mechanism again for Unity. The second one is really around the health of the relationships with developers, which again comprise like 70% of the revenues of the business. Someone's going to have to be really good at talking to developers and getting them back on board with the company's strategy, and then that trust relationship that's been impaired over the past 2-3 weeks. Both of those are pretty tough problems, and it kind of speaks to JK's point that this is a pretty special CEO out there somewhere.
I've been talking about this a little bit. I don't know if, I mean, I know what they did was really bad for the industry and got a lot of hate, you know, but at the end of the day, they're the only engine in town. It's not like they have anywhere to go, so it's like exactly, like I think the revised deal actually kind of repairs most of the egregious thing that was in the original one. So I kind of feel like that may have been
Well,
overstated and
I think there is some truth to that, Eric. I do think that ultimately development studios are likely going to make the best decision for themselves economically. Like, I do think that some companies, like, obviously Applovin's never gonna use Unity again, but they're also not going to use Unreal because the difference between 5% and 2.5% is pretty big for them, right? So but I also think that like studios like mine are waiting on management. It's like, I like we have seen over the past 3 years, so many people jump from Unity to Unreal because not just because of the pricing change, but because of lack of technical execution and just lack of like features and capabilities within Unity engine itself. So I think like it's there's kind of like a trust issue, but there's also just an ability to trust whether Unity is going to be able to continue to like develop against the engine in a meaningful way. And they actually just released a great update right after JR, ironically right after JR announced his retirement, but I do think there are going to be some studios who, despite the difference in pricing, that they're probably going to be looking at engines like Unreal. I don't think Godot is viable for a professional, well, like a larger scale team, but Unreal, if you know the engine really well, and then you need somebody to really understand the engine, because what Unreal is not good at is stripped down. The ability to, like, because they got so much stuff in the engine, so for mobile to be able to like pare it down takes extreme skill, um, which is
Yeah.
not, but it's still somewhat viable, and especially when you
All right,
when you
but
see.
the point that I've heard over and over
Mhm.
again is that for 95% of the apps on the App Store, Unreal is overkill, right? And then Unreal engineers cost a lot more money because most of them work on AAA, right? So it's like, really, I mean, like, are you going to really like build up a whole new team of Unreal engine makers and Unreal guys to like build your next, puzzle game? I don't think so. I
Yeah, I
I,
don't
I
think
just
that
don't. I don't see it.
the Rift, I don't think caused any sort of near term risk to software numbers for Unity. I think it's more of a long tail thing of 3 to 5 years. What sorts of other engines will developers rally around? Who's going to build something new? And I think you're basically opening yourself up to that for sure.
Yeah, just I don't think that's a real threat. I could be wrong, but I just they
Right.
basically secured their position in this business by giving this thing away for basically free for the last like decade,
Right.
So it's like, everyone got used to it. It's like crack, and so like you're not going to be able to take it away,
Yeah.
right?
Well,
And you're not, and
one
there's
other
no
thing.
alternative because no one was moronic. And I said this in the pilot. There's no one that was moronic enough to build an engine in this environment in which Unreal
Yeah.
Unity was giving it away for free, right?
Yeah.
Basically.
I don't know if you guys have checked out Tim Sweeney's opening address from Unreal Fest, but one of the things he also says is he addresses the 5%. He's like, "Do we need 5%?" He's like, "Yeah, actually, you need 5% to be able to have a kind of profitable, sustainable business." And so,
They don't.
the
They
other,
lose their ass on that engine. They don't make money on fucking Unreal.
so he said that at times in the past, Unreal was their only source of revenue, and that's what allowed them to be profitable.
Only
I
source
do
of
think
revenue,
you, yeah,
not
Yeah,
profit.
it's not profitable. They make the Fortnite prints
Never has
money
been
even when
profitable.
it's
well,
down,
but
and then
yeah,
everything else is a loss
the
leader.
point I'm making though is like, okay, even Unity at 2.5%, whatever that is, like, is that even sustainable, or are they going to increase it again? And so there's that issue. Um,
I mean, it's not really sustainable as stated anyway, right? Because it's just 2.5% of any game in the future, not not anything that's been made already. So
yeah. So we'll see, and
Right.
I think those are some of the considerations that developers, including studios like mine, think about. And in fact, like we're going to start a new project in Unreal. So anyway, the one other thing I think we should talk about for our audience and is to highlight the relationship of Unity, or the impact of Unity, to Applovin. And for our audience, it's really because of, by owning the engine, I think there is the potential to bundle, as Unity is trying to do with the pricing change with level play. And so that's like the main issue there. I don't know if you guys have any thoughts on that as well. And in my opinion, that's one of the main reasons why Applovin is trying to acquire Unity, whether that's viable or not, is because Applovin, through its history, has historically always tried to not compete on a level playing field. They've always looked for various types of competitive advantage, and they see that as an advantage for Unity.
Well, I mean, I don't know if that there's even any debate at this point, but clearly this move, particularly when it was tying royalties to downloads, was a way of trying to leverage their position in the marketplace to get them to move to level play, right?
Mhm.
So, I mean,
Yeah.
but that was never really stated specifically because I think they would probably gotten sued to oblivion if they did that.
Yep.
But because I think it is anti-competitive by almost the definition of anti-competitive,
Yeah.
70% market share. But but yeah, I mean, this is a direct blow to Applovin. I mean, this is like a big fuck you to Applovin, clearly, right?
Yeah.
But I just don't think Applovin has any, I mean, sorry, Unity doesn't want anything to do with Applovin. I don't even know if that's even a possibility, right? Given the history between the two companies and how ruthless Applovin has been over the years. They don't like each other, right? It's not like, like there is like egos involved, right? So yes, I can understand why Applovin would want to buy
Mhm.
Unity because then they would own the entire ecosystem basically. But I don't know if that's in the cards. But I don't know. I would see if you guys disagree.
I mean, we already know that Q3 numbers are reaffirmed, so the shock to level play the other way probably didn't happen. Um, and you have to think about like the go-to motion for Applovin sales folks over the past few weeks. Like, do you think it made it incrementally harder for them to land deals or whatever in this environment with the way that Unity juxtaposed their fee structure to have credits or whatever? Um, I don't think it's going to play out this quarter, and I'm not really sure which way to go on this one. It was definitely an assault against Applovin. I'm not sure it really panned out as expected.
And I mean, we can get into it, but like the math just doesn't work. Like there's no way that you can structure this deal that it comes out good for Applovin. No matter how you do it, it's massively dilutive. I mean, if you lever up the pro forma EBITDA 4x, you've got 9-ish billion of of debt on the books. They already have 3.6, so that's like less than 6 billion of debt financing that you can kind of go out there and get. Unity's market cap is whatever, but it's significantly underwater. They're not going to take the current price in a deal. They're going to want something much higher than where it is. So you're going to need massive equity dilution to buy an unprofitable business like this. It just doesn't
But
work.
and not to mention, they made all kinds of assurances to Iron Source when they did that deal, right? And if this deal were to happen, Iron Source would get annihilated. Like that entire team would be unnecessary, would be redundant, you know? Um, so it's
Yeah.
like, no, I think that's just people pontificating. It's like the EA Disney thing. Everyone always wants Disney to buy
It's
EA,
been
you
long
know?
enough. We'll probably get that rumor again soon, or Comcast for someone. It's
No,
been
no,
long
we
enough
it
since.
just happened recently this last week.
Okay.
I'm just like,
Yeah.
how many fucking times do I have to answer that goddamn question, over the last 25 years? It's like nuts, All right.
Yeah.
But actually that's another whole nother subject, but turning my my point of view may be changing on that one. But all right, moving on.
All right. Okay, so let's dive into AppLovin's business. And just for our audience, I will kind of describe their business at a high level. And it's actually, to some degree, easy to understand at the high level. They've got some window dressing and stuff like that in the financial filings. But basically, AppLovin's business is comprised of two main parts: the software platform, and secondly, the apps, although it should probably just be called games. And the software platform is basically focused on ads, more specifically, user acquisition, meaning game marketing through ads that appear in games, attribution, which really is speaking about associating installs to sources and tracking spend in games by players. And finally, ad monetization, which is the ability to show ads in a game that game publishers can make money from. So within the area of ads, AppLovin has four specific products: App Discovery, which is campaign management tool that UA managers use to buy advertising from AppLovin. And we can talk about this later, but this product also does things like ROAS targeting and other kinds of targeting capabilities, which in theory, they aren't supposed to be able to do. Some companies like AppLovin, Unity, TikTok, and others have basically not really adhered to the spirit of Apple's privacy initiative, and IDFA deprecation was supposed to kill these kinds of product features off. But through fingerprinting and other means, they still exist in the market. Okay, so that's App Discovery. Adjust is the company that they bought that is their attribution platform. It tells you things, as I mentioned earlier, how many installs, how much revenue, from what sources you made in the apps that you instrument with this thing. Max is the product that I think people are becoming more and more aware of because it's been brought up. This is the thing that Unity is trying to fight with its version of the product. Level Play, Max has just been destroying in the market. It's been gaining so much market share, but Max is an ad mediation product that game publishers use to make money from their ads and their games. And finally, AppLovin has this thing called Roll, which maybe not worth mentioning too much. It's some kind of connected TV platform. I don't know too much about it, but that's there as well. And the second part of the business, so that's the first part, the ads business. The second part of the business is the apps or games business, and they own and partner with a number of game studios that develop mobile games. This has been through internally developed studios like Lion Studios and Matchington Mansion Studio, Firecraft Studios. Now, they label Firecraft sometimes as a partner, or some other game studios as a partner, but according to the word on the street, a lot of these studios were actually fully kind of initiated by Applovin. They just didn't want to make it too public because of the potential customer adversarial relationship. And there's all sorts of other things we can dive into. I won't go into those issues here, but there's ways in which Applovin can use their customers' data against them. Anyway, just to wrap up the app side of the business, today the business is 350 mobile free-to-play games across 11 studios, and that's basically the business: ads and games. Now, maybe some final background in terms of the business is maybe to walk the audience through a little bit of the historical context behind the company. But Applovin kind of came up on the ad side of the business. They were known with a reputation of being very aggressive for doing whatever it takes to get deals done. And they were very successful early on in the ads business. But then what happened is, with the rise of like the data-driven ad platforms like Facebook and Google, the SAN networks, self-attributing networks, these companies, through machine learning and through targeting, basically started kicking everyone's ass. Applovin was then concerned with their ability to compete and with their future viability, so then started moving into games. So that started in 2018 with the launch of Lion Studios and Firecraft, as mentioned. Later, with the impending launch of IDFA deprecation, then Applovin really started to work on two big initiatives. The first was, they talked about, okay, we are now going to become the Netflix of games, and like the ad platform becomes a recommendation engine against their suite of content, or the 350 mobile games that they have. They tried to make that work. They don't talk about that in their financial filings anymore. I don't think that's really panned out. And then they acquired Adjust, and kind of the speculative theory is that the idea would be, by acquiring Adjust and this vast treasure trove of player data, that you'd be able to, even with limited attribution that you have with Apple's, with the current capabilities that you have from Apple today, that you'd be able to take limited windows or limited data and then map them to kind of the player spending behavior that you would expect from these players. And if you were able to do that, then even with limited attribution, you'd be able to have better predictive capability and be able to predict things like ROAS and things like that. That also, I believe, has not worked out. So kind of like the two big things that they were working on have not worked, which leads us to today, where they have, given the new environment with IDFA deprecation, but still having the ability to do ROAS-based targeting and things like that. And with the success of Max, they've just been killing it on the ad side of the business. But now we've got Unity coming in with the new pricing and trying to like push level play, and that takes us to today. So hopefully that wasn't too boring for people, but that's like the historical context and a description of their business. And Eric, maybe you could talk about some of the financials from here, unless you guys have any thoughts on the business side.
Okay. Kind of my sense here is that they have been struggling along with the rest of the market from their app side of their business, and I think they've been downsizing that. And so they've been down like almost, I think it was 25% year over year last quarter, and now they're expecting the portfolio to perform better in the next 2 quarters. So basically stabilize, and that seems to be happening according to the data that I'm looking at. So that actually will not be such a detraction of their business. They, but my whole problem with this whole story really is that, and this is the big rant that I've been doing for like, I don't know, who knows how long, is that Applovin has been cheating this whole time, right? And so like they divested their business out of the games business because they saw the writing on the wall, and that the games business was not going to be as lucrative as it has been in the past, right? That was like kind of their head fake when they were struggling on the ad tech side to build up their games business to show growth, right? Now they're divesting out of that because they know that business is going to be to struggle, and now they're going to make investments into and now they're just focusing on ad tech. And so the Max platform is killing, but I think they're killing because they're still doing fingerprinting, right? So if it, and this is where I think this whole story kind of is going to fall apart starting this quarter and probably in Q1, is that I think Apple's going to make an example of them when it comes to fingerprinting, um, and that is going to be a problem for them. So I don't know. Maybe we'll get to this later,
Yeah.
but
Yeah,
anyway,
they did note last quarter they're going to start to invest more for growth in the app side of the business, particularly in the second half, and that's where you'll see that acceleration you just talked about. The games business runs at about 18% margins, which is actually quite high for mobile gaming. So they do have some room there with some EBITDA compression, obviously. I guess like it's kind of instructive to note like why they're so worried about share loss, specifically in ad mediation, because if you look at the market cap is $14 billion. So the overall company trades at, call it 4.5 times revenues, mid-teens cash flow. If you take that one step further, the apps business, let's call it like a $1.2 billion run rate, depending on stabilization. Again, 18% margins, declining revenues. Maybe the market gives you a 2.5 multiple on that, or $3 billion. But if you look at their software business, which actually isn't software, you have to make up the rest of the 11 billion. Let's call that a $1.8 billion run rate or 6 times revenues, which is not bad for ad tech, but it's certainly not software, right? Software is anywhere from low teens to high teens, depending on what you're looking at. So the risk for them in losing share and revenue in software is much more prudent and impactful to the overall value of the company than losing a little bit of money in apps business.
Yeah, and I think if, just to put some numbers around, so we talked about Unity and Applovin and kind of comparing the ad tech businesses, because I think that's where most of our audience really cares. Applovin's revenue in the most recent quarter, $750 million, 406 million of which was from the software. So that's a little more than half. And then, the rest was the games, the apps business. Unity's Grow Solutions, which admittedly is more than just ad tech. There's other stuff in there. There's like, other game services, but it's just not the engine business, right? That generated $340 million of revenue. So it is a little bit smaller than Applovin's, software business. But I think, two more important points. Applovin's business is much more profitable. Unity doesn't make money. I mean, Iron Source made a little bit of money, and the ad tech business does probably make some amount of EBITDA to offset the losses in the engine business. But, Applovin's software business has a 67% EBITDA margin last quarter. Like it's just printing money at this point. So big difference there. And also the growth rates, pro forma for Iron Source, Unity the Grow business was only growing 7% last quarter. Applovin's business is growing 28%. So the updates to Max and what they've done with the platform with the new engine has really been working. Now, as Eric alluded to, will that fall apart with fingerprinting? I think that's the big question.
Yeah, it's funny because I'm surprised that they're suggesting they're going to invest more on the app side, just because the word on the street is that over the last couple of years, they've been preparing to divest that business, including like,
Just the
internal.
market shifted and then the buyers just disappeared for anything,
Mm,
right? I mean, like
okay.
you always thought like, oh, Embracer will eventually buy this crap because Embracer buys all the crap, and then the gravy train for everyone just ran out. In 2021, early 22, the market just turned and capital dried up for everyone. I was kind of alluding to it. They just rolled out the latest version of Max, the mediation engine. Whatever they claim, it's a new advanced AI engine. I don't know. I mean, we talked to Mate and he said like, yeah, it's way better than Unity. So whatever Unity's offering with Level Play. So whatever tech they did, it's working. I'm gonna probably get hated for this, but customers are clearly app loving it. Sorry. But
Jesus.
you see it in the financial performance the last few quarters. So it's real. I still think at some point, what we were just discussing, the end game is to sell the apps business. I don't think it makes sense to keep it, but the market's just not there anymore. So I kind of think that, is fingerprinting really going to kill this business? Because I mean, IDFA was supposed to kill it. Whether they're cheating or not, they've clearly survived better than the biggest bears thought they would at this point. Is this going to be the shoe that really drops them?
Yeah, I think when we did the podcast with Mate, he felt like using an SDK and predictive that you still might be able to get around even with the depth of fingerprint. I mean, that's an open question. I don't think anyone has a definitive answer on that, but it'll be interesting to see how that plays out. But it could have a, Eric, to your point, I think if they can't do that, yeah, they're in some trouble.
Yeah, I'm really torn here because it's really clear that Applovin is the leader in this industry, right? They're just destroying the competition across the board, really. From efficacy of their ad tech, right? And Max is killing it. Um, they may be kind of the only survivor in this like UA Ragnarok that was thrust upon us by Apple for no fucking reason besides being Apple. Um, on the other side, though, every UA person I talk to, even Matei, says if the fingerprinting ends, AppLovin's reign ends. And every other competitor has basically succumbed to not doing fingerprinting, starting with Facebook, then Google. Well, Facebook and Google together, Snap. I've heard that now Unity is no longer doing fingerprinting, and that's part of the reason that they are falling behind. And so it's like it's only and probabilistic attribution is fucking fingerprinting. Okay, it's not just it's just it's all the same shit. I don't care what they call it. So if if fingerprinting is eliminated this quarter or Q4 and Q1, I mean it's going to be rolled out over the next 6 months. These guys may become the poster child for Apple's ire, right? They may actually go after AppLovin specifically and say, hey, look, if you have this SDK in your app, we are not updating it, right? Because this thing we know is fingerprinting, right? And then they're doomed, right? Now, I don't know. I don't know what's going to happen with that, right? And the real irony behind all this, by the way, just as a clear clarification, is that, for all these privacy hawks at Apple, the two biggest releases this year have been all based on fingerprinting, right? It's like Hawkeye Star Rail and as well as Monopoly Go. These guys are just juicing the system with fingerprinting with both Unity and Applovin. So it's like, I don't know. I feel like Apple is not going to let this slide. And they're not going to let them continue to operate. They're going to be on the same level playing field as the rest of us, as the rest of the ad tech world. And they may start to lose share to Google, to Facebook, etc. So I think Q1 is when they're going to start to have challenges, and we'll start to see evidence of them going after Apple, going after Applovin directly.
Yeah.
But
And,
I don't know.
and to your point, Eric, it may be that if AppLovin is so set on trying to acquire Unity in some way, even even though it doesn't make sense, it may be because that might be the only play if they don't have confidence in a post fingerprinting world. That may be the only play they have left to gain that competitive advantage that they're always looking for.
I mean, you could say that that was a similar reaction to what they had for IDFA, right? That was timed with the first transaction. Last quarter, Applovin was asked about the impact of privacy changes in iOS and Android specifically over the next 6 to 12 months by an analyst that might impact execution at all. And Adam's direct answer was actually like that he didn't see anything in the next 6 to 12-month term that was going to be a material change in how they are able to operate the business. And he continued by saying the biz has already been, constantly evolving through similar changes, that they move really fast and they've always been able to operate within the boundaries of guidelines. So that answer, kind of suggests that somewhat clear sailing for the next couple of quarters. But at the same time, the stock's only down 10% from the highs, and expectations are somewhat elevated with regards to what app prints and guides. We also know that the Apple process is evolving in real time, right? So starting with iOS 17 in mid-September, Apple will be reviewing all SDKs, and any issues around fingerprinting will then have a cure period. And then in spring 2024, Apple will start rejecting. And so anyone with experience in dealing with Apple as a platform will understand it's not much of a coordinated relationship. It's you need to abide by the rules, and Apple wants to be the privacy forward network. And frankly, they've kind of hobbled bigger companies over the last 10 years in the ecosystem for similar or lesser charges, right? And kind of to Eric's point, many of the industry's biggest launches of the last year have been driven by fingerprinting. And there's still a push from publishers to launch big titles ahead of potential market shifts, which does suggest some near-term tailwinds to app. Although just loftier expectations. If you look back at last quarter, the setup was completely different. The stock was heavily shorted. There was a lot of fear around fingerprinting. Unity was suggesting the ads market was flattish, and then Applovin just had this huge beat and raise. That's not the same this time around, at least not right now. So I certainly wouldn't expect another 30 to 40% RIP post numbers. So you have to kind of ask yourself, is like, what is like the coordinated story that app is suggesting right now? Like, are we already at the highs?
Right.
It's all around fingerprinting.
Yeah, and the other point here is that they have a really tough comp in Q1 and Q2 next year, right?
Yeah.
Because these games were just they were spending gajillions of dollars on UA, and most of it, a lot of the share went to AppLovin, right? And so to
Yep.
the extent that we don't have these big releases and Scopely spending all the Saudi money on the next big release, or Honkai spending like what 100 million dollars on acquisition. I mean, so it's like, yeah, is there anything coming up in Q1 and Q2 that could even come close to that? And then on top of it, they may have Apple like breathing down their necks, despite what he says. I think he uses his words very carefully on these
I know. I
earnings
like the
calls.
I like the line that they operate their business within boundaries of guidelines. So he's basically admitting that they live in the gray area. He's not. We don't operate within the guidelines. We operate within the boundaries of the guidelines.
We push
We
it.
live in the gray area.
Yeah.
If you watched Ahsoka recently, he's basically Balin Skull. He's the gray Jedi in this, right? And so they it's probably somewhat of an admission that yes, they're doing things that Apple doesn't like, but hasn't explicitly forbidden. And as things change, they'll continue to do things that Apple doesn't like, but aren't explicitly forbidden.
Yeah.
But see, this is where they have been expressly forbidden. Like they've been actually expressly forbidden in what they're doing, right? And you can call it whatever name you want to call it, but if you're basically targeting individuals and getting information about these individuals and using that for attribution and targeting, that is fucking fingerprinting, And
Yeah.
so I've heard that there are solutions around this. The one solution is basically batch attribution, right? Or batch, figuring out groups of players and figuring out what their attributes are and using that. But even then, you're still having to track individual attributes. And this is where my knowledge kind of like I'm way over my skis, and I need to talk to someone like Matei to figure this stuff out. The other thing, which I think is the most egregious thing he could do, and he may do it, I don't know, right? Is you take a partner like Scopely and you say, hey, look, we want to do fingerprinting, but we're no longer allowed to do it. So what we will do is you collect the information and send it to us at Applovin, and then we will send you back the information about attribution and targeting, etc. And that way, they completely eliminate the middleman of Apple and their platform, and so Apple has no way of tracking that. So not through the SDK, but they collect it through the SDK of the app, and that's sent back to the so they're just not they're getting it indirectly. That would be fucking gangster, dude. So if they do that, more power to them, dude. I don't have that in me to like even consider that as an option, but they may actually do that. But I don't know. It just seems like it's going to be a struggle for them, despite what they're saying.
Yeah.
If they could carry on.
I've got a little bit of a conspiracy theory, which is just based upon
No,
observing
you,
behavior.
Joseph. I mean,
Not word on
everything
the
you
street.
say is conspiracy theory at this stage.
But
Continue.
this is through observing behavior and talking to some people here in Silicon Valley. But kind of like the idea is that certainly Apple is idealistic in some sense and wants privacy for the right reasons. But there's also some rumblings that Apple just hates Facebook. And to the extent that IDFA deprecation hurts Facebook and some other players might be benefiting and taking share from Facebook, they'll just kind of let it go. But at some point, they will drop the hammer and make it right amongst all the players. And so that conspiracy theory suggests that now that Facebook has been properly kind of hurt by this initiative, that then now it's time to like actually roll it out for real. Anyway,
Hmm.
I don't agree with that, but it's an
okay,
interesting
yeah,
theory.
I mean,
I mean,
I
the writing's on the wall for Apple. Like whatever happens, somehow the App Store monopoly is going to get broken down to some degree, and so they're doing everything they can to position themselves as a privacy centric. We're better than everyone else, and so when there is competition of some sort, they have a relevant place rather than everyone just hates Apple and will go to other alternatives at some point in the future. That's the way that I've been thinking about it.
I mean, I'm actually I'm such a simple person when it comes to this sorts of things. Like I think the reason that Facebook, Google, and Facebook, Google, and Snap immediately eliminated fingerprinting was because they were afraid that their apps would be banned from the app platform, right? Well, I mean, that's what it comes down to. It's like it's very simple to say, "Hey, Facebook is not abiding by these privacy rules, so we are going to not allow Facebook to be updated." And so basically, your app is useless, right? On the flip side, AppLovin and Unity and Iron Source at the same time had like a gajillion apps, right? So it's impossible to police, all the SDKs that are in every single app that's known to man, right? And so it's like it was much easier targets. And so Facebook was like, "Look, we have no other choice but to stop fingerprinting and doing what we've, been doing or when IDFA happened." So, so anyway, that's the way I kind of look at it. So, but to your point, Joseph, I think at the end of the day, if they want to be honest about really giving a shit about privacy for their customers, they need to stop allowing fingerprinting. Like that, it's so freaking clear. It's like that is not part of their privacy policy, right? That is not private. That's not a private device, and the other part that we're not talking about is the Google part, where Google is going to come out with actual privacy policies, right? They are going to do what Apple was trying to do, right? But they're doing it in a much more efficient and effective and a nice way for their publishing partners, and doing it over time and really thinking about it and leveraging their publisher group and trying to figure out the best way of doing it effectively. And that's happening as we speak as well, which also will be an impact to Applovin going forward as well. So, yeah.
all right. Anything you guys want to talk about from here, or should we end with just overall outlook? I mean, I kind of get the sense of what you guys think in terms of outlook for AppLovin, but
I think it's going to be an interesting pair trade, Unity and Applovin for the next few quarters. I mean, it's been an interesting pair trade for a while now, but I think until the fingerprinting, nail in the coffin really drops, I think Applovin will continue outperforming Unity. If I think about Unity, like I think the downside is mostly valuation. Like I don't think there's like a ton of fundamental downside to Unity at this point, right? In the numbers, and so you're really just talking macro stuff. So you can kind of get beta risk there, and then you can kind of play the guidance cycle for Applovin and a nice little pair trade. So I think that's going to come back in the market here. For those that are not stupid finance dorks like me and Brian, what I'm talking about is you long a stock and you short another one, and you try to arbitrage the difference in returns between them. So if you think Applovin is going to outperform Unity, you can long Applovin and short Unity. Because they are such similar businesses, you're kind of hedging some of the overall market risk that affects all of them, and you can extrapolate the specific differences in the fundamentals that are occurring. And so I think that's going to be an interesting trade that comes back in the next few quarters. And then when that flips, if we do think that Applovin's Q1 guide or Q2 guide is going to be kind of pukey as fingerprinting really hits, that trade can flip, and then you'll see the other side of it.
Yeah, I think right now for me, these two stocks are entirely about sentiment and positioning. And for me, I'm getting the sense that Unity is starting to bottom out in terms of sentiment, but I would want to own it on a reset. I do think there's still potential for next year's numbers to be markedly lower than the street is expecting or investors are expecting. For Applovin, like I said before, we're entering into a different quarter. It's a very important one, and the setup is entirely different. So from a tactical perspective, I'm still not sure I want to, feed into investor narrative that they're expecting another big beat and raise and everything is fine because of these platform risks. I'm not saying it won't happen, but I'm not comfortable with owning a stock where potentially revenue could have very big headwinds for something that seems fairly obvious, but maybe they're able to mature the way around it. I don't know. But I'm inclined to believe that I would see some weakness versus a year and a half of strength.
Yeah, I would agree with you, Ron. I think just the risk profile for Applovin, given what's coming up, is just really high. And there's some potential for them to like navigate through it with different things. But I also think one thing that might be interesting, although it sounds kind of crazy, is if Applovin actually does try to kind of create like the Red Hat Linux version of Godot. I've heard they've been looking at Godot a lot, and they obviously, you know, they've been trying to give people reasons to move off of Unity just because of the recent stuff that's been happening. But I don't know. It'll be obviously
This
interesting to see what happens. But go ahead, Eric.
fucking Godot. Give me a break, dude. Dude, that's like a pipe dream. I actually agree with both Matt and Brian. I think Applevin's going to just absolutely crush the year, right? I mean, they're just destroying it right now, and so it's like the
Mhm.
fundamentals could never be strong, but I think never stronger. But I think Q1 and Q2
Yeah.
it's going to be tough for them, right? And so it's like it's not going to be this easy breezy like growth story that you saw for the first half of this year. I don't see any big products coming out next year that can comp that. And I think Unity, I don't think fundamentally they're in any great spot either. And I think part of the reason that they had to make this big change to their engine is because they were fucking knowing that they were going to have a tough second half of the year, despite the fact that they reiterated guide, which doesn't mean much, because the guide wasn't all that great to begin with. It's like, yeah, I don't think Q4 is going to be anywhere near consensus. I'll be honest. So I think it's tough. And the big thing here is as an analyst covering this for investors is that these things are hedge fund hotels now, right? These are not real stocks that like big companies like Fidelity and T Rowe are really investing in and hope. These are people that are trading in and out, and it's going to be very volatile. But it's not for the
Yeah, I mean,
uninformed,
just
I
look at the
suppose.
earnings day volatility on these stocks. Like
Yeah,
it's insane. And in that pair trade, people trade in and out. And
yeah,
Brian and I were kind of saying opposite things, but I think we're actually saying the same thing. Like I'm talking about, the pair trade is going to last you maybe a quarter or a month or two, right? And then it's going to flip, right? And that's how these stocks trade. They're very volatile. It flips on a dime. These are not blue chips. They're not profitable significantly. They're not dividend stocks, right? These are trading vehicles. Hedge funds are in and out of them, and you need to be really cognizant of that.
yeah. Buyer beware, right? But there's money to be made. That's what the hedge funds love. They love these volatile stocks. I wish these days of old would come back because we haven't
Yeah,
seen this in
what
a
I would say is
while.
like the long only position, like you said, in these names is non-existent. Hedge funds
Well,
for
except for
sure. But
KKR
the,
still
the one
has.
big difference is that in terms of relevance for the stock market, because of the volatility, they've gone from like being followed at around a 2 to like a 9.5 or a 10, which makes the volatility even more perverse. It's going to be a rough quarter, one way or the other.
Yeah.
All right. Well, gentlemen, thank you so much for all of your insights and thoughts. And I think that's it for our audience. We'll catch you next time. Thanks, guys.
Later.
Thanks.